today I'll be talking a little bit more about price movements that are driven by news, anything that you see in the newspaper that may affect the price of a currency, which of course is the basis of fundamental analysis. If you remember from our previous lesson, fundamental analysis deals with news of any sort that comes out affecting currency prices. And technical analysis is, to recap, is the study of price movement over time, and it's all based simply on the price movement without regard to the actual news that comes out. Okay, today's lesson is going to be fairly short, but it's going to introduce a very valuable concept, and that is along the lines of stop losses. I'm going to explain how shocking news, such as terrorist attacks and things of that sort, can affect your account, and why you want to set a stop loss. Sometimes people are tempted to place their orders without having a stop loss. I'll show you why not to do that. Prime example number one would be what happened on September 11th of 2001. The World Trade Center, the Twin Towers were attacked in New York City. How did that affect the market? Now, if you were not trading in the foreign exchange market at that time, then you may not be aware of what happened. Okay, so I'm going to bring up a chart that shows you exactly what happened. Okay, now this is from a different trading platform than the Awanda one we've been using, but it gives you an example, or actually the actual chart of what happened that day. As you can see here up at the top, it says viewing daily data. So each one of these bars is one day, from Wednesday, August 15th, 2001 to Thursday, November 1st. So I've included a time frame around the actual attack. You can see here in this box here, as just watching where my cursor moves, in this box here you'll see the actual date as I move my cursor along over here. So you can see this is August 16th, 17th, August 20th. Okay, so the pair that's shown here is the US dollar shown against the Swiss franc, with the US dollar being the base. So you can see that the strength of the dollar was climbing right up until September 6th, and then it started to reverse a little bit on its own, and then right here is September 11th, and it shows what actually happened that day. Tremendous price movement, but did it stop that day? No, it did not. It kept moving on down. This was an extremely fast devaluation of the US dollar, and I'll explain